Hello everyone, welcome to the market snapshots for today. So Nifty is down by 0.6% at 24,615, Nifty 500 at 23,690, which is down by almost 0.5%. Nasdaq rallied strongly at 29,733%, 733, which is 3.5% up, and S&P has been up by almost 1.8%. So very strong day for the US market. I guess very volatile for the Indian markets. This is Nifty 500. The advances were 172, declines of 330, and new highs are 9 against new lows of 491. The breadth is pretty stable, I would say. I mean, yeah, it has deteriorated a percentage or a quarter, but then not much changes. Above 20 EMA 295 stocks, above 50 EMA 300 stocks, and above 200 EMA 291 stocks. This is Nifty 50. The chart is looking very good. I mean, I think it has completely transformed in last 8 to 10 sessions. Bullish looking chart. The trend has changed to positive. I mean, this particular range, I think almost for last 3 to 4 months, this was not breaking and it has broken down, and Nifty is sustaining those levels. So pretty good. Structurally, no problem in the Nifty 50 chart. And this is Nifty 500, again a strong looking chart. A lot of, you know, this resistance has not gone back. It is almost trading at, close to its all-time high. So things looking good for Indian market. And still, I have been telling you guys to have an exposure of not more than 50-60%. If you are a new entrant, if you are holding on to positions, that completely makes sense. Just follow your stop losses, and continue your investments and trade. But when it comes to new entries, why I have been so particular that the exposure cannot be more than 50-60%? See, if you see what happened in Indian market in last two trading sessions, which is Friday and Monday, and then when you look at Tuesday, right? I mean, market turned out. So it is volatility at its peak, right? I mean, if at all, you try to make a lot of exposure at in today's market, mostly you'll be chopped out. Uh, People who have been holding on since maybe April, they are in a very good position because, they have already taken a lot of leap from where they would have started. And if you try to replicate them looking at their account sizes, mostly, you'll fumble in this market. And that is the reason I have been very particular that exposure cannot be more than, like, I'll tell you yesterday a number which is so shocking. So Nifty's advances has been close to in the range of 35 to 40 from last 5-7 odd session, and yesterday it was 5. See, this is peak level volatility. I mean, breaking down, coming from 35 to 30, 25, 20 makes sense, but it coming down from 40 to 5, I mean, that's almost 80% down from its current. So that is the reason I have been telling, markets look very good. The chart looks very strong. Everything is looking strong. And still, I have been telling, if at all you are a new entrant, the exposure cannot be more than 50-60%. That is the reason. The markets are very volatile. See, globally, if you look all the charts, I mean, I think the strongest looking charts at this point of time are for Indian markets, but somehow, there is too much of external pressure. The dollar keeps rising. That, I mean, basically for the Indian market, I think more than what President Trump tweets, it is more to do with the rise of the dollar. And the rise of the dollar is something, which is not only bad for India, but it is extremely bad for the US market itself. It is exactly the same for any emerging market in the world. So, that is the reason, a lot of confidence is not coming in. But something which has happened very positive about the Indian markets, the FIIs have not sold a single dollar from last 6 trading sessions. So that's a very strong thing. At least, they have stopped at least selling. So Yeah, those are the positives of the Indian market, but at the same time, the volatility is something which you need to address, and that is the reason the exposure should be around 50% at this point of time. Looking at the overall sentiments of the market, Nifty 50 bullish, participation weak, and the breadth is strong. Nifty 500 bullish, participation weak, and the breadth is mixed. And like I've been saying, for the Indian markets now, a lot of strength is going towards larger cap companies, towards defensive sectors. It is no more with the micro caps or in small caps. And slowly, gradually, you'll see a lot of people talking about it. But then I have been saying this throughout the month of July that the strength in the month of April, when this rally began, and a lot of movement happened in the small caps, micro caps, but somehow it is not transiting anymore. Though the indexes are struggling big time, and any momentum or sustainable momentum follow-ups are only happening in large caps or defensive sectors. This is S&P 500, very strong day for the US markets, 359 to 141. See, this strength doesn't matters because today it was strong, yesterday it was very poor. So that is the reason peak level volatility, even the US market. Although the charts have reclaimed a lot of good EMAs, the breadth has come in very strong. But again, it's a very volatile market. I mean, slowly, gradually only we should increase our exposure. The new highs 26 against new lows of 474. Breadth, very strong breadth at like above 20 EMA, 337 stocks, above 50 EMA, 345 stocks, above 200 EMA, 350 stocks. Nasdaq, I mean, just turn around. I mean, it was going nowhere, and just look at what has happened in last 3 to 4 trading sessions. But like I said, I mean, although the participation and weak and the breadth have become consistent with this rise, so I mean the rise can for sure be trusted because it has very gradually the participation and the breadth have become consistent, so I think the rise can be trusted. um, S&P 500, like I mean, if at all you have been watching my videos, you would know entire June, I think May, June, July, I have been telling this is the strongest looking chart all across. Whatever chart you're looking at, there is nothing which is as strong as S&P 500, and not the chart in isolation. I mean, a lot of data is in support of S&P 500, and that is the reason, I mean, Nasdaq was the outperformer throughout last maybe 1.5 years, but S&P has just taken over. A lot of diversification is happening from semis towards large cap tech and defensive sectors even in the US. And a watch out index for sure, you can have an exposure in this index. Russell 2000, again a very strong day, trading at almost its all-time high. S&P 500 has already broken that level of all-time high, and this is also trading at almost all-time high. So this basically shows a lot of liquidation is moving towards smaller caps as well. But for me at this point of time in the US market, the go-to bet is for S&P 500, so that is where I am betting at. The overall sentiments for the US markets is all green, bullish, participation strong, breadth strong. S&P 500 bullish, participation strong, breadth is strong. Russell 2000 same bullish, participation is strong and breadth is strong. I mean, a very, very strong day for the US market. Sectorally, the indexes were like, I mean, I think there's hardly anything which was red in yesterday for the US market. But again, like I said, although things have turned around, but I would not straight away start moving, increasing my exposure. Maybe today, basis this, if you are a new and if you are holding on to positions, just hold on. I mean, there's no worry there. But if at all you want to make new position, the exposure should be around 50-60%. The reason is very same, it is a volatile market, uh, and you should respect and trust the volatility. The markets are going to stay. If at all you can save your capital, it will work. I mean, just imagine if market just keeps going up, you keep getting opportunities. So no point getting all in today. Just hold on, see to it how markets are performing, how consistent is the participation or the breadth, and accordingly take your bets. For the US market, for me again it remains S&P 500. That is where my bet would be. things have changed a slight bit here. The yields have fallen a bit. I mean, I'll show, I mean, I'm not having the chart, but then if you look at the chart, it's a strong looking chart. I mean, it has just that it has come down from 4.7 to 4.6. Does that means anything? No, I mean, it's just a pullback. So I mean, so that is the reason I'm telling you that exposure should not be more than 50-60%, because see, it is a strong looking chart and it is just pulling back. Unless until it comes down, this will keep tightening the equities, and that is the reason I am saying that the exposure should be 50-60%. Dollar has fallen a bit, but again, a strong looking bullish chart. It is just that it has come down a bit. The structure looks defensive now. VIX at 16.5. Yeah, it has risen for sure, maybe 10-12% in last trading session, but again, I don't trust. I think it's very, very slow to react. Bitcoin has been up by almost 1500 points in last trading sessions at 64 to 64 425, and gold is also up by almost 70-80 points. So dollar, this is the chart. I mean, like I said, it looks little bearish, but again, it's a strong looking chart. Is still forming, higher bottoms. So unless and until this structure completely breaks down, and which will be good for any market, be the US market, Indian market, or any emerging markets globally. So we all want this to go down along with the yields. Bitcoin, like I have been saying, this entire phase, I think a lot of accumulation is happening in Bitcoin. And maybe, for me at this point of time, it is just a trading instrument. I'm not even looking to go long with a holding, because, unless and until, this changes, this entire direction changes, that is the EMA. I don't think I would be interested, doing anything, because for me at this point of time, it just remains sideways for a holding. Trading, for sure, trading opportunities are available in Bitcoin. Same is the gold case with gold. I mean, it is accumulating around these levels till the time the 50 MA retest happens and the direction itself changes. I won't be interested. Maybe trading opportunities are available, but nothing on the holding front. So yeah, that's everything. I mean, that's what I would say for the Indian markets. Like I said, the markets were looking very, very good, but I mean, yesterday the entire thing, I mean, there's nothing wrong about it. It is just that it is high level of volatility, and that's the reason your exposure should be around 50-60%. Same is the case with the US market. The exposure should be 50-60%. In both the markets, if you are already holding on to certain positions, just keep holding them with your existing stop losses. But if at all you are a new entrant, don't make 100% all-in exposure, because the markets are volatile. The yields have fallen a bit, the dollar has fallen a bit. Let's hope they keep falling. That is what will eventually help the equities markets globally. And about the Bitcoin and gold, I mean, you can look for a day opportunities if at all you have a very long view. Maybe these are accumulation zones. So that is what it seems like. If at all you have a lot of patience, maybe you can start accumulating them. But then if at all you want to trade or swing trade, do positional bit, I think the direction still needs to change. That's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.